What's going on, ladies and gentlemen? Yep, my voice sounds all croaky. I'm on my way out losing my voice, so I'm going to try and preserve it as much as I can. But today's market update is just to bring you into a little bit of an insight into what to expect going into the weekend. Now listen, next week we do have the CPI data and the FOMC going to let us know exactly their FOMC projections. This is very important. Why? Because then we're going to know exactly what the Fed has got in plan. Now, they might not even say anything that we don't already know. We know they're going to decrease the interest rate, or should I say, they're only going to increase it by 50 basis points in the next meeting on December the 14th. Happy days. So, problem that I've got is they've already hinted that they're going to get tighter and tighter in the near term. Wall Street is talking about a Powell recession, a man-made recession. What does that mean? How is it a man-made recession? Well, look at it like this. There are so many things that are happening across the board, which naturally you would assume that we are in a recession. You've got the yields inverting, okay? And that means shorter-term interest is what is being favored, not longer-term interest. Now the cost of business is starting to increase. So tech stocks, all right, are going to see the brunt of that. Why do the bonds and the yields work so closely with the actual tech stock market itself, being in this instance the NASDAQ? Because if it costs more money to do business, then the longer term's not going to look so great for those tech stocks, which is why when you see the yields rising, the NASDAQ and the S&P usually tends to follow and go the opposite direction, or assets depreciate, all right? But what do we mean about this Powell recession? Why hasn't the US stated that it's already in a recession, and the idea of forcing the US into a recession just so that they can achieve the 2% inflation mark without increasing the interest rate so aggressively? Well, look, let's look at it like this. You've had the housing crisis back in the day in the 2000s, all right? Back then, there was a big problem with liquidity, which led on into the 2007-2008 subprime mortgage crisis, okay? You've had cryptocurrency that's lost nearly 2/3 of its value from a $3 trillion marketplace to now just shy of 800 billion, maybe less. And then, of course, you've got the tech stocks that have lost 50% of their value. But what you've got to remember is banks are a little bit more liquid. It's just everyone is keeping the cash. So then when we take this information and go directly to the charts, we've got to try and work out at what point will the sentiment of traders thinking that we're going to force ourselves into a recession, or are we already in the idea of a recession? Now, guys, I know nothing. All I'm telling you is what the street is saying. But what I can tell you is the charts will do a good job of reflecting people's idea of what they think's going to happen. And that's what you guys are as traders, investors, holders, whatever you want to call yourselves. You are speculating on the idea that at one point in time, people are in agreement with price, which will then either lead it to the upside or to the downside. So let's roll over to the charts, ladies and gentlemen. Mad love and respect for passing through. If you are new to the channel, be sure to like and subscribe. Let's get some flavor in the charts. Okay. So, Bitcoin, not doing much yet again. Consolidating. We saw that nice drop yesterday, and then in the US session, they made an attempt higher, not really successfully gaining that much ground, but enough for us to say, okay, it looks like they're consolidating yet again. In my honest opinion, I believe that they're going to be holding price out up until the CPI data that comes out next week. What you've also got to take into consideration is the fact that we have got news announcements coming out this Friday. Now, what's the importance of this news announcements? Well, listen to this. We have the unemployment claims data coming out today at 1:30. That's why I want to get this video out to you as soon as possible. If the unemployment claims come in less, then we are in essence solidifying the idea that the Fed needs to keep increasing interest rates. It doesn't matter that they're only going to increase it by 50 basis points in December. It just tells us that the less people that are claiming, the more people are in work. Given that last month's figures were showing a 263,000 increase in work available for the people of the citizens of the US, it's telling us that the Fed's got a bit of a problem. On top of that, we have the consumer confidence reading coming out this week as well. So that's just going to put a spanner in the works. If less people are claiming and more people are optimistic about the economy, happy days for the Fed. That's where we need then go into the idea of a man-made, force-driven recession. They will have to force the US into a recession by significantly increasing interest rates to slow it all down. What does that mean for Bitcoin? Well, let's just go on to the higher timeframes for Bitcoin for a second. Quite frankly, Bitcoin does need to come into this area right here to finalize the vector candles. Although it has come down and stayed within this region whenever they hit a pool of liquidity right here. Because you've got to understand, inside of this candlestick, there is huge imbalances. Let me show you. Look at this. This is the Atos platform. This is Atos platform, okay? It's a free service, all right? Just go to Google and type in Atos platform, and it's a professional trading software, and you can link up your accounts, do whatever you need to do with it. But for crypto, guys, it's free of charge, and you get the data feed. So it's similar to ExoCharts, but this one is it's a free version, for the better word. So if we just go into the 4-hour time frame with Bitcoin, you can see, and when I said to you about the vector candles, if we just go over here, this is what I'm talking about with imbalances. Look at this madness in the chart. Can you see there's nothing in there? Look at that. Zeros. The only participant that can move the marketplace like this is the market maker. There's no one there to buy or sell. This is what you would call ignition algo. Now, if you pull up the CME's T's and C's for market making facilities, you'll see that they kind of like make an awareness towards ignition algo, which in essence means the algorithm forces price to a particular point just so it can get its orders filled at a desired spot. Remember, the market makers know where everything is going because they're providing the liquidity for it. So you could assume that this spot right here is the ignition algo, where the algorithm programmed to match the orders between buyers and sellers kicks into a little bit of a steroid mode and shifts out to the upside. Principally, we would assume that the market would come back towards this point, which takes us around the 16,620. Go back into the chart and you can see that we need to get in towards that zone, which happens to be the vector candle principle, okay? Now, some of you may not understand the vector candle principle or not. I've been staring at this bad boy for quite some time. And one thing I can say to you is that they always end up coming back towards those zones, whether it's to finalize the order book, whether it's to come back and take the liquidity. I mean, if we go over to the high block itself, for all my guys that want to know the liquidations, at 20 past 10 this morning, we had a little bit of an understanding in relation to yesterday's big tax on those retail traders. $4.8 billion worth of long liquidations had just been taken. Now the market is stabilizing. I'm not really seeing that much commitment coming in, other than the fact that we got shorts to the upside, where there's $4.6 billion worth of short liquidations at 17,600. Now, look, earlier on, or yesterday, or should I say Monday, sorry, remember this move to the upside? Most of Twitter was going crazy about the idea of a bullish flag that was coming into play. Okay, that bullish flag made them pay the price. More importantly, what you've got to try and get into your mind is the market trying to induce? Try and avoid looking at structures for a minute. Is it trying to induce? If I were to say to you, and some of you might know this, if I were to say to you to go and research everything you know about goldfish, this is a very famous story. Go and find everything you know about goldfish. 90% of you will Google it. You'll go and get books. You'll speak to people. But how many of you would actually sit down and watch a goldfish in a bowl? We're easily laid to... We're swayed to the idea that we just need to go to a reference point, and if that reference says fish do this, fish do that, happy days. If we come to the chart and assume that this structure means that price is going to go inside of this zone, break out inside of here, and then shift to the upside, cool. Well, there you go. That's what happened there. Now, if millions of people are looking at that structure, that means there's millions of liquidations that are available to be attacked by Mr. Market Maker, and that's exactly what had happened. This is where the behavior comes in. This is why when you want to watch what a fish does, you need to pay attention to it and sit and watch how it fishes, how it moves around the bowl. The analogy is there, ladies and gentlemen. All you need to do is then look at the charts and say to yourself, what are they doing more of and not following through with it, which is a good reason to believe that they're going to do the opposite. In other words, if they're trying to move higher away from this zone, yet the candles are not really showing me the strength of price moving away from this zone, I'm only led to believe that they're trying to mark up their positions to get shorts filled at the highest possible point so that they can get the commitment from retail to buy at that point, because you can't buy if no one's selling. Likewise, you can't sell if no one buys. How are you going to engage in a marketplace? Walk into a shop that is empty and there's a guy at the counter and he turns around and says to you, yes, please. And you're in there and you're like, well, what's going on here? I need to put this point across to you all. You walk into a shop, it's empty, and there's one guy sat at the counter. He says to you, yes, sir, what can I do for you? And you walk in with the big packs of cash and say to my guy, I want to buy everything in this shop. He'll look at you and be like, hold on a second, bro. There's nothing for you to buy. You're like, no, just let me buy something. Look, you've got to have something. And then he says, nah, man, I've got nothing to sell to you. So there's no marketplace. You can't demand something if it's not there, which is the important thing about the market. There will always be a supply in the market. Always. Because you can't buy if no one sells and you can't sell if no one buys. So who's in control of the market? The people that are coming to the market or the people that run the market? Who make it possible for you to buy and sell? That's what you got to keep in your mind. And then when you look at that and have that in your minds, translate it to the chart and say to yourself, okay, Bitcoin right now is consolidating on the 4-hour time frame. Cool. What does that tell me? That tells me that they made an attempt earlier on today. If we go to the smaller time frames, you can see that initiated a stop hunt low to the downside, triggered some more shorts to the downside, recovery of the blue vector candle down at the lows right here, and shift back up. Why? Why did they go there? Because the vector was present. Why? Because there's an imbalance in the chart. And the order book needs to finalize it. So the principle would then say that if Bitcoin can aggressively go down to only come back up, that's very important for us because it shows that there is interest inside this zone. So now we're going to wait for the equilibrium aspect of it. One thing has to happen in order for something else to happen. Then when that is achieved, we would then believe that Bitcoin is going to try and make a move higher to finalize these imbalances in the chart. That's the principle. Okay? You've got news announcements coming out which can affect the whole story. Unemployment claims at 1/2. Going over to Euro. Euro USD is making a beautiful move to the upside, and Euro has done a significant job of holding very well inside of this region right here. Okay? Who on earth is disturbing me so many times? I don't get it. Now, what you've got to be careful of is as much as it looks like it's topping out, you've got to look at the bigger picture and say to yourself, well, where are we going? Where are we coming from? Check this out. We've broken a key moving average, and we are coming back up into previous zones in the chart, which will be the points where they can sell from. Like I said to you earlier, you can't buy if no one sells, and you can't sell if no one buys. So what are you going to do? You are going to lead people into the idea that it's now time to buy because you are encouraging people to pick up your orders that you want to sell. So naturally, you're going to be moving price towards points in the chart where you can engage in that behavior. Whether it sells from that point or whether it breaks away from that point is not the main problem. The idea is what happens when we are at that point. We pay attention to the price structure. We would then assume, based on calculated probabilities, that if it does hold in this range, we would expect it to go and break out further and test the next zone. This is why you always end up seeing the markets repeating the same thing over and over again. But of course, the sweet spot thing is you've got to try and find out the when. That's what's important. Okay? Rolling over to gold itself, gold has done a good job of consolidating very well at its highs coming. And if gold can break above the 1800 zone, that is happy days. We'll be going back into the conventional safe haven that investors like to turn to. Okay? We've got Tesla right now that is still trading lower, and it is a bit of a problem for Tesla because it just keeps on bleeding out to the downside. Now, of course, it's broken its 800 EMA on the higher time frames. We've gone to the 4-hour time frame itself. We would assume that this area here is where they are likely to try and hold out. And if you can see, they are working a particular zone, which is a vector candle region. So if Tesla does decide to roll over from 174, we would expect them to try and come into the 153 region in the chart, okay? But what you've got to be mindful of is the fact that the NASDAQ has done a good job of holding out inside of this zone. This is what's important about it. This area here is huge for NASDAQ. It's make or break for NASDAQ in principle. And if NASDAQ can't hold this point, and we have got a lot of transacted volume right here, this is the stopping volume candle, and a stopping volume candle in principle tells you that they tried to move price to a specific point, but they didn't want to create an influx of orders, so they just switched it and went the opposite direction, triggered all the longs, pulled it back, hit the liquidations, and put everyone back into the same zone. All right? This is a very important zone. The moment NASDAQ releases from this area, it's yippee-ki-yay to the downside. Why haven't they done it already? They had every chance to do it yesterday, but they have done nothing but drop for the past week. Is there room for recovery? The 10-year yields, slowly going up, but nothing scared, nothing sinister. You've got the bonds themselves climbing. That's good news. As long as bonds are going up, assets and yields will be going down, but asset prices will be going up because you are purchasing or safety of the government's treasuries. That's what people are doing right now. Investors, they're all going to the safety of the government and utilizing the exposure the government has on a basket of assets. Okay? Dollar dominance itself, be careful with dollar dominance. As much as we are witnessing dollar dominance holding out in this zone, ideally I would want to see dollar come back down. Why? Because we've got a huge imbalance down at the lows right here and a gap. Once they finalize this gap, it's happy days. Why? Because these 2 points in the chart on dollar dominance itself tell me that if they do decide to release and break down lower, everything against the US dollar in principle will be rising, which leads me over to BTC. See, Bitcoin sometimes is a little bit of a good asset when you think about it. NASDAQ on Monday took a nosedive. Dixie shoots to the upside. Euro takes a nosedive, okay? Everything against the US dollar was going down and Dixie was going up, yet Bitcoin did nothing. But Bitcoin did make us pay the price. In the Asian session, it did collapse. Consolidate, stop hunt rise, rip to the downside. They made us pay. However, we're in exactly the same situation right now. Dixie's going down. NASDAQ is holding. Euro is moving up. So we've got a different story now. If Bitcoin doesn't do anything in the New York session, and it pretty much stalls throughout the rest of the day, keep an eye out on the Asian session tonight. The principle says that we are due for a midweek reversal on Thursday. So is that going to be the case today with Bitcoin? I hope that serves you well, ladies and gentlemen. I need to preserve my voice and prepare myself for tomorrow so that I don't get all croaked out and sound like a frog. But I hope you've enjoyed today's video. Remember, unemployment claims come out at 1:30 today, and you've also got tomorrow the consumer sentiment coming out as well. But I'll be updating you guys before that anyways. But mad love and respect for everyone passing through. If you haven't got access to these the indicators, check in the description below. You'll have everything that you need, or it's pinned to the chat, the comment on this video. Everything you need will be there. And just go through the steps on the Traders Reality website. You want to check out the Patreon, everything is there for you as well. Mad love and respect, guys. Again, I apologize for not being able to do a live, but I'll be checking in with you all tomorrow. Take care of yourselves, gang. Peace.